There's many, many layers when it comes to your dream retirement, and Warren Wealth Management, well, they know all about it, whether it be wealth management, whether it be taxes, maybe you're thinking about, where's is my health care, how I'm going to afford that, all of those things Marcus Warren can handle. Yep. Okay, welcome back, Marcus Warren.
Thank you.
Warren Wealth Management, once again, he's a great resource. You're gonna find out right here, because we're going to talk about something now. When I think about retirement, I was telling you, I think about, okay, CDs. I think about storing away money, and I do think a little bit about healthcare, but I don't think much about taxes.
Yeah.
And you're saying that is a vital part of your retirement, right?
Yeah, it is a vital part, and most people don't consider taxes because when you are in that accumulation phase, you're just worried about the things that you talked about, just building up that nest egg, trying to get a good return on your investment. But once you make that transition to retirement, you have to understand, because most people have saved their money in these tax-deferred accounts, that taxes get pushed to the forefront. Because a lot of people are surprised because they've been told that they're going to pay lower taxes once they retire, that they're actually paying just as much or more in a lot of instances. And that's because a lot of the deductions that you had while you were working, they tend to go away once you hit retirement. Your house, your home mortgage interest, right? Generally, when you're retired, that's generally paid off, or you're 25 years into a 30-year mortgage. So most of their payments go into principal. Kids are no longer living with you anymore. I mean, at least you hope not. But kids are no longer living with you anymore, so you're not able to deduct them. You're not contributing to your company retirement plan, so you're not getting that pre-tax deduction. And then, of course, charities, things of that nature. People tend to give more time once they're retired versus cash and things of that nature. And the IRS doesn't let you deduct your time. So those deductions go away, and people find out, wait a minute, I'm still paying all these taxes, and why?
Yeah, and there are strategies, and he can tell you all about those Warren Wealth Management strategies to minimize that tax hit that you get from Uncle Sam. Okay, you've talked before about these tax buckets.
Yes.
Okay, what exactly are these tax buckets, and how does it work? Okay.
So, for all the investments that people may have, we have broken them down into basically all of them fit into 3 different types of accounts. We call them buckets, right? Taxable buckets. And so the first bucket you have is your taxable bucket or tax now bucket. These are things when you put money in, whether you take money out or not, you are going to have to pay Uncle Sam. You get that 1099 each year. And these are things like savings, checking, CDs, stocks, things of that nature that you make any money, you get that lovely 1099, which is a love letter from that financial institution that says, hey, you made this much money, now you got to give some back to the IRS. So that's the taxable bucket or the taxed now bucket.
I love the picture, Uncle Sam with "I want more."
Of course, yes, of course. And then you have the tax deferred bucket, right? And this is where most people have all of their savings, and that's the tax deferred. There we go, tax deferred bucket. So these are company retirement plans, your 401ks, your IRAs, 403bs, money that you have been told to defer all of your life. You get that tax deduction while you're putting money in, and you are taxed later. And the scary thing about this bucket is the fact that when you when you take that money out, you're subject to whatever tax rates are at the time that you take that money out. So it can put you in a precarious situation, just like I spoke about earlier, about having to pay more taxes once you're retired. And then last but not least is the tax-free or the tax never bucket. And these are investments that you put in this bucket. It grows tax deferred. You take it out, it's tax free. Things like Roth IRAs, Roth 401ks, life insurance retirement plans, HSAs, health savings accounts, 529s. These are where you really want where people should want most of their money to be, in these tax free buckets, because it's not federally taxed, state tax, no capital gains, and things in this bucket, it doesn't count against the thresholds that determine how much of your Social Security is taxed. So a lot of good benefits for being in that tax-free bucket.
Oh, this is all interesting. Like I said, I had no idea, and I encourage you to make an appointment with Marcus Warren of Warren Wealth Management. We'll tell you how in a second. Okay, you hear a lot of people or a lot of wealth managers say, okay, you need to have a diverse portfolio. Yep. I hear very rarely anyone talk about tax diversification. So what is tax diversification? How does that work?
Yeah, you're right. When people think about diversification, they think about having stocks, bonds, large caps, small caps, internationals, whatever it may be, just being diversified from an investment standpoint. But you can also be diversified from a tax standpoint. And that's basically having investments in those 3 different buckets that I talked about, because it gives you the option on how you want to receive some of that money. I'll give you an example. So say you're retired,
okay,
and you have money across all of those 3 buckets: taxable, tax deferred, tax free, and you want to purchase a car. So you want to make a big car purchase, say it's a $30,000 car. When you have things in those 3 buckets, you have options. And so it's like this. So if you have a good amount of money in that tax-free bucket, you know if you were to take a distribution, a $30,000 distribution from that tax-free bucket, you don't have to pay any taxes. However, if you only have money in that tax-deferred bucket, now, because it hasn't been taxed, just to net $30,000, you'd probably have to take out $35,000, $37,000 out of that tax-deferred bucket just to get that $30,000 car. And that is where the benefits in having those options, being able to be strategic in how you receive that money, that's where it comes into play. Tax diversification should be number 1.
So it's quite obvious to me, there are strategies that can help you minimize that Uncle Sam take. And when he reaches his hand in, there's ways that you can strategize to say, okay, you get yours, don't get me wrong, we're not breaking any laws here, but I can do it to my benefit, because believe me, Uncle Sam's looking out for Uncle Sam. So you got to look out for yourself.
Yes, and there are strategies that you can employ now. That last graphic that was on there that had the 3 buckets of money, like I said earlier, most people have their money in that tax deferred bucket, and right now taxes are at historically low levels. So it might make sense, not for everybody, but for some, to move money from that tax-deferred bucket into that tax-free bucket. Now, what you don't get away from is you still have to pay the tax, but right now taxes are on sale, right? And they're on sale for a limited time only.
So pay them now.
Pay them now while they're on sale, because tax rates are set to go up at the end of 2025, if not sooner, based on some of the things that you hear from the current administration. So there are opportunities now to position yourself where you're not going to have to worry about tax rates going up in the future.
And everyone's story is different, like you said. It depends on your situation, but that sounds like a sound strategy to me.
Absolutely.
Warren Wealth Management. Now, if folks would like to have like a 15-minute phone call with you, I know your schedule gets pretty busy. How can they go online, check out your schedule, and schedule that call with you?
Yeah, so a couple of things that we're doing. You can go to talktomarcus.com. When you go to that website, it brings up my calendar. You can schedule a quick 15-minute phone call. We can find out where you are from an investment and a tax position, find out where you want to be, and then see if we're a good fit and we can add value to wherever you are.
I think, it's obvious to me that you've got all the resources, but what I'm really impressed with, Marcus, is that your passion, because you always get really excited talking about this.
Right.
You enjoy, tapping into all the resources that you have and some of your peers that and talking about this to you is like a sports fanatic talking football or NFL Sunday, right?
Yeah, absolutely, because, especially now, because when we talk taxes, there are so many advisors out there right now that utilize what is called, tax bait when they really don't know anything about taxes, just to get people to click here or go to their dinner, things of that nature. However, in our office, I'm certified. I'm a tax enrolled agent. I know these things, and that is where we add the most value to our current clients and people that want to work with us.
And I know we have to go, but that retirement tax review there that we were talking about, retirement tax reduction review, tell me about that.
Yeah, so taxes are one of the biggest expenses. If you go to warrenwealth.net, you can click on that retirement tax review, put in some information, and we can see if some of these strategies that I talked about today fit your needs.
There we go. Thank you so much. Once again, Marcus Warren, Warren Wealth Management. Okay, coming up.